Hello, this is Chad Stayskull, President of Eagle Wealth Management, with our educational economic update for August 2016. In this month's video, we're going to talk about some of the events that influenced markets in July and give you some insight of what it could mean to you as an investor. Also, to keep our hardworking attorneys happy, please stay tuned at the end of this update for a required disclosure statement. So, markets had a lot to think about in July. A British exit, interest rates, and earnings season all affected market movements last month. After major markets dropped sharply following Britain's vote to leave the European Union in late June, markets regained steam and rallied for 4 straight weeks. This pushed the S&P 500 and Dow to new records. We often talk about the importance of not overreacting to market declines. And this quick rebound is another example why. We can't predict how markets will perform after a shock, but the biggest market days often come shortly after a pullback. So calmly assessing the situation and avoiding emotional responses is a smart strategy for long-term investors. Okay, so let's talk about some of last month's economic events. Let's start with the Federal Reserve. They held another open market committee meeting at the end of July, and they voted to keep interest rates steady. This was not surprising, and now the debate is on whether or not central bankers will raise rates at the end of this year or not. Investors were surprised in July by low first estimate of second quarter economic growth. The first official measure of second quarter gross domestic product showed the economy grew by just 1.2% over the prior 12 months. This is after a first quarter GDP growing by only 1.1% over the prior 12 months. So, over the past few years, the economy has set a pattern of slowing down in the first quarter and roaring back in the second, and this does not seem to have happened this year. Though we'll see several more official revisions of the GDP growth, 2 quarters of slower than expected growth is a bit concerning. However, after looking at the data, we saw a drop in business inventories. This drop actually ate away at some of the growth in the second quarter GDP. So, economists expect businesses to rebuild those inventories. By rebuilding those inventories, we expect a boost in economic growth for the rest of this year. One of the biggest positives we saw was consumer spending. This is the biggest driver of economic growth. And it's also a great sign for our economy. We have a strong labor market, rising home prices, and wage gains. This all supports additional consumer spending this year. So, coming back to the Federal Reserve, they looked at this GDP report in stride. They stated that they believe near-term risks have diminished. We can take this to mean they want markets to prepare for a possible rate hike this year, or possibly early next. So what can investors expect in the coming weeks? In a word, volatility. This is not very much different than what we've already had from the start of this year. Overall, economic fundamentals in the U.S. are looking pretty solid. However, turmoil overseas, the presidential election, and anticipation over future interest rate increases will affect market movements. As always, it's our job to keep you informed. And that's it for this month's educational economic update. But there are some upcoming events that we really want you to know about. This coming Monday, August 15th, we are hosting our Halftime Report. Our Halftime Report is a mid-year economic review and outlook. We're going to have the event at Greg's Grill in Bend, Oregon. If you have not already reserved a seat, please do so immediately. And we understand many of you are not here local in Oregon. So for those of you who are not able to attend, we will be posting a video of the presentation soon after the event on the 15th. Also, please save the date for our annual Client Appreciation event on Saturday, September 24th at the High Desert Museum in Bend. We will be sending out more information and invitations to our clients in the next couple of weeks, so you can hopefully join us for an entertaining evening. Once again, this is Chad Stayskull, President of Eagle Wealth Management, signing off for the month of August 2016. So now for those disclosures. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. Our phone number is 541-330-8255. 0220. We'd be happy to talk to you. And while we believe all the information in this report is reliable, we cannot guarantee its accuracy. Our opinions expressed are subject to change without notice and are not intended as an investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Thank you, and until next month.